filtered through from that 683 we hit at one stage yesterday. We also have seen, though, the dollar regaining a slightly firmer footing against the euro. So really the rand tracking those movements.
Absolutely, Stephen. You know, we've spoken at length about this over the past few weeks, about how the rand's fortunes, especially against the dollar, is governed closely by what happens to the euro-dollar cross. And, you know, this is no exception again. It's just moving in the other direction. And this time we're seeing the rand giving back a bit of gains as the dollar takes heart from yesterday's encouraging employment figures. I think, you know, all eyes now rest squarely on this afternoon's US payrolls figures, because we've had some kind of mixed results coming out of the US Labour data this week. And I think the unemployment rate and the payrolls figure this afternoon will have the final say. If the numbers are soft, I expect the dollar to weaken against the euro and against the rand. So I think we've got to be careful about writing off this rand just yet.
Of course, we had golden forex data out yesterday that showed that it looked like the Reserve Bank had been accumulating some dollars. And of course, we've had Finance Minister Pravin Gordhan speaking this morning, and that's just ahead of the IMF and World Bank meetings this weekend in Washington, and saying that they are working with the Reserve Bank on accumulation, but highlighting that it is a costly exercise.
It is a costly exercise, and what was interesting about yesterday's reserve figures was the fact that government's contribution, if you like, was relatively muted compared to more recent months, where we've actually seen their deposits, their dollar deposits with the Reserve Bank actually getting greater. Last month they actually started to withdraw some of those deposits. So they didn't help from that front, but we did see the Reserve Bank accumulating more reserves in the form of longer dated FX swaps. And of course, all of these mechanisms come at some kind of opportunity cost and some kind of price tag as well. Of course, if we're not building reserves to try and defend the currency from excessive strength, then we could be using that money to build hospitals, roads, etc. And of course, then there's also the sterilization costs associated with the interest rate differential, which is still quite vast between holding dollars and holding rands.
I'm just going into that meeting. Do you think that the currencies are really going to be a big topic of discussion this weekend? Do you think it's just going to be rhetoric?
Well, I think it will be you know, a lot of talking, but I don't know how much can actually be done. I think we've seen Brazil coming through quite vociferously in recent weeks and saying that, you know, that the certain currencies are too strong, and the export sector is suffering as a result. And even though that they've imposed some kind of Tobin tax measures, it hasn't really helped. So I don't know what we can really do about this. I think we're sitting in an environment where Europe and America has got fundamental problems, and those currencies have to remain weak until those fundamental problems are resolved, until the economies get back on track. And in such an environment, by default, your emerging market currencies are going to remain stronger for longer. And I think we've just got to resign ourselves to the fact that we can't rely on currencies, because currencies are probably going to be strong within the emerging market universe. It's really going to come down to age-old productivity.
Well, there have been ongoing suggestions.
At the Labour front.
There have been ongoing suggestions that South Africa should perhaps be following Thailand's example, or perhaps Turkey, and relaxing exchange controls or doing away with them altogether. Do you think that could be effective in weakening the rand?
I think you know, it could be one measure that could be deployed, and I think in the current environment it makes a lot of sense, given that emerging markets are the flavour, and the flight to quality, so to speak. There's a very small chance of that occurring at this stage of the game. So, you know, I think it's a move in the right direction, but the one problem with that is that it will probably send a very strong message to the market, saying that the South African authorities are very confident in their macro picture, and that could ironically actually cause the rand to strengthen in the short term. So I think it's a move in the right direction. I'm all for the continual liberalisation of exchange controls, and this would be a good time, but we might actually end up with rand strength, which could be counterproductive.